Hi guys, welcome back to my channel. Kelvin here. As investors, we always try our best to invest all our money. We be like, shut up and invest all my money. But there's actually one part of our money that's not invested, and that's our CPF money. Every month, we are forced to. We willingly contribute 20% of our pay into CPF, where they collect interest and dust until we become old apek and old ama. Then we can finally use the money. Only part of it. The interest we can earn from CPF is about 4 to 5%, which is actually quite good. But what if we can grow them faster? Like imagine if our CPF can grow as fast as the Dogecoin. All of us would be millionaires by now. But sadly, that's not possible. Instead, we have the next best option, which is to invest our CPF money through a robo-advisor. Which brings us to today's topic, introducing Endowus, which is currently the only robo-advisor which allows you to invest our CPF money. So in this video, I'll be sharing my first impression of Endowus. What portfolios do they have? How do they help you to invest? What are the pricing? And how do they compare to other robo-advisors? I will also talk about what I like and what I don't like about Endowus. Full disclosure, even though I'll receive a small amount of money if you sign up using my referral link down below, this review is very neutral. All these are my own thoughts and opinions and should not be treated as financial advice, yeah? So with that out of the way, let's jump right in. A quick background about Endowus. Endowus was founded in 2017. Remember 2017? It was when we were still able to travel to nice countries and meet our friends and family? Me neither. I barely remember those times anymore. Anyway, Endowus was founded by a team of people who had tons of experience in the finance industry. The CEO, Gregory Wen, previously worked at UBS as an investment banker, then worked at Grab as their technology and payment partnership lead. Samuel, who has 26 years worth of experience, including being the CEO and CIO of Morgan Stanley Asset Management in Asia. Ning San, who looks like your Korean oppa, worked at Goldman Sachs and Blackstone Private Equity before joining Endowus. As mentioned earlier, Endowus is really unique. Most of the robo-advisors only allow you to invest your cash. If you want to invest with your CPF or SRS with other robo-advisors, they'd be like, no, we don't do that here. But Endowus has got you covered. They allow you to invest your cash, CPF and SRS. Basically, all your money lah. Like any other robo-advisors, Endowus has its own investment strategy. They call it Evidence-Based Investing. On their website, they wrote, Evidence-Based Investing means analyzing empirical data and time-tested academic evidence and applying it in a systematic manner rather than trying to speculate or outguess other market participants. If you catch no balls what they are saying, don't worry, neither do I. But after some research, this is what I understand about this strategy. Basically, in evidence-based investing, you make investing decisions based on long-term observations of markets and how they work. Let me give you an analogy. You are at the hawker center and you don't know which food is nice. Then you see a long queue at the Cai Fan store versus no queue at the Mee Siam Mai Ham store. Which do you choose? Based on your deep knowledge and long-term research of Singapore kiasu culture, I know which store food is nicer, right? Long queue means the food is good. The longer the queue is, the nicer the food. That's why you should go join the queue. So that's evidence-based investing, making investing decisions by researching historical data. Now, there's another special thing about Endowus. Many robo-advisors build their portfolios with ETFs, like Stive's Equity 100 portfolio has QQQ, iShares Core S&P 500 ETF, iShares MSCI China ETF. But for Endowus, they do things a little differently. They are a bit special. Instead of ETFs, Endowus portfolio consists mainly of mutual funds. Basically, in mutual funds, there's a fund manager managing the investments. And these are not just any funds. These are funds by Dimensional and PIMCO. If you don't know how good these funds are, let me show you some comparison between Dimensional and Vanguard funds. In the research by Hill Investment Group, they found that Dimensional funds consistently outperform the Vanguard funds. Like US equity, Dimensional fund achieved 9.5% compound return and Vanguard was only 6.7%. For international equity, Dimensional fund achieved 7.3% compounded return while Vanguard was only 4.2%. I will link the PDF down below if you are interested to read it. But remember that past performance does not guarantee future performance, yeah? Anyway, here's the thing. These funds are typically only available to large institutions like sovereign wealth funds. Like Singapore's Temasek Holdings and Malaysia's 1MDB, Malaysia's Khazanah. These funds are not available to peasants like us. But now, with Endowus, we can invest in these funds. Like many other robo-advisors, Endowus also has portfolios that cater for different needs. Let's first talk about core portfolio. In this portfolio, you can choose your asset allocation, whether you want to be super aggressive or super conservative. Based on what you choose, the portfolio will have different holdings. For example, if you choose very aggressive, you will get 100% equities. Or if you choose conservative, you will have 20% equities, 79.4% fixed income, and 0.6 cash and equivalents. As you might imagine, the more equities you have in your portfolio, the higher your returns will be when times are good. And when times are bad, the faster your portfolio will drop. The 10-year annualized return for most aggressive portfolio is around 10.23%. Then, with a very conservative portfolio, the annualized return drops to 5.25%, which is still quite good. Endowus also has a rebalancing feature, so that your target asset allocation is always met. So let's say, if you choose a portfolio with 80% equities, maybe the stock market crash and your equity percentage drops to 60% now, then you become sad. And Endowus be like, I got you bro. Then they will help you to buy the dip and slowly increase the percentage back to 80%. This is good because you'll be able to buy at a huge discount. And when things finally recover, you will be rewarded well. So who should use this portfolio? This portfolio is good for anyone who wants to invest over the long term and don't want to care about the investments, because Endowus and the fund managers will help you to take care of the rest. All you need to do is just choose your target allocation, then you can just forget about it, leaving you with more time to do the things that you like to do, like playing with your goldfish or traveling overseas to Chinatown, Holland Village and Arab Street. Next, you have ESG portfolio, short for environmental, social and corporate governance. If you are blah, what's that? Again, let me try to explain in a way that you can understand. Environmental is investing in green energy or invest in companies that don't pollute our world. Basically, like Captain Planet lah. Next, social is investing in companies that care about society. Stuff like human rights, diversity, and gender equality. Next, governance factor is investing in companies that have good practices, like caring about their employees and not try to zagan them or squeeze them dry, like some companies I know. The idea is that by investing in companies with good ESG, investors will be exposed to lesser market volatility, has lower risk, and can achieve better financial performance. In fact, in Endowus, the ESG portfolio performance is actually on par with core portfolio's performance. However, like I said, past returns does not guarantee future returns. Researchers have said that they have not found conclusive evidence that ESG portfolio can outperform normal portfolios. The ESG portfolio is quite similar to core portfolio, where you can also choose your risk level from very aggressive to very conservative. I feel that whichever you choose doesn't really matter, as they are all good funds. So that's the ESG portfolio. The next portfolio is Cash Smart. The purpose of this portfolio is to give you a safe place to put your idle cash. For example, if you are saving to buy a car, you can't invest the money because the market might crash and you might lose everything and your wife might run away. But you also don't want to put your money in the bank because the money will sit there and do nothing like a lazy bum. Instead, you can consider putting your money into portfolios like Cash Smart. Cash Smart has 3 risk levels: Core, Enhanced and Ultra. Core is the safest, estimated to give you about 0.8% to 1% after the fees. According to them, you are unlikely to lose money. Next, Enhanced is estimated to give 1.2% to 1.5%. It has slightly higher returns and of course with it higher risk. So only put money that you don't need within 1 month. Finally, Ultra is estimated to give 1.8% to 2%. You should only put money that you need 3 months later, like maybe your travel overseas money, because we can all forget about traveling overseas for the next few months. Okay, the last portfolio, Fund Smart, is really interesting because all the previous portfolios already have pre-selected funds. They are like your McDonald's set meal. You have your McLao side, McSpicy, fries and drinks. You don't have to worry about what to choose. But if you are an investing pro, then Fund Smart is really good for you. Because with Fund Smart, you can choose what fund you want and how much allocation you want for each fund. You can mix and match the funds whichever you like. In the dashboard, you can first choose your risk tolerance level. Maybe you are scared that you will lose money. You can choose the lowest risk level. Then after that, you can choose your funds and allocation. Now, these funds are selected based on Endowus investment criteria. These funds need to work towards improving the investor's returns. Best performing funds, it needs to fit the portfolio and has the lowest cost possible. So you can rest assured that these funds are all good funds that has Endowus seal of approval. Once you are done, if Endowus thinks that the funds does not suit your risk appetite, it will let you know. But here's the most impressive thing. It can tell you what was the historical average annual return and even show you a graph. So you can choose this portfolio if you are the kind that prefers to choose your own investments. Okay, next, let's talk about pricing. For normal portfolios like Core, ESG, Fund Smart, if you are investing with cash, you will be charged 0.6% when investing 200k and below, and the fees will decrease the more you invest. I would say most new investors will be starting out with a small amount, so it's 0.6% for most people. But if you are using CPF or SRS to invest, Endowus will charge a fixed 0.4% fee. So it's quite obvious that it's better to invest in Endowus using your CPF and SRS because you get to save more money on fees. If you go to Silly to compare, you'll see that Endowus fees is one of the cheapest when compared among other popular robo-advisors like StashAway, which starts at 0.8%, or Scythe, which starts at 0.65%. But that's not the full picture. You also have to consider the fund level fees. Generally, mutual fund has higher fees when compared to ETFs. The total fees will add up to more than 1%. But because there's a fund manager managing the funds, there's a possibility that these funds are able to outperform a passive ETF. So the higher fees might actually be worth it. Next, for CashSmart, the fees are 0.05%, which is quite cheap in my opinion. Oh yeah, by the way, if you sign up to Endowus using my referral code down below, you will receive $20 off the access fee. I will also be paid a small amount for every sign up, yeah? Now, a very important question. Are our funds safe in Endowus? What happens if they touch wood bankrupt tomorrow? You will be glad to know that your assets are stored with UOB Kay Hian. So whatever happens to Endowus won't affect your assets at all. In the unlikely event that Endowus goes bankrupt, you will still be able to redeem your investments holdings anytime. So no worries there. Now let's talk about what I like and what I don't like about Endowus. Let's start with what I like. First, and this is Endowus' main selling points, you are able to invest your CPF and SRS money. As of right now, no other robo-advisors in Singapore allow you to invest your CPF. This makes investing your CPF money much more easier and safer in my opinion. Second, the funds in Endowus are funds that are offered by reputable fund managers like Dimensional and PIMCO. As mentioned earlier, traditionally, these funds are only available to institutional investors. But now, we can finally access these funds via Endowus. All these funds have gone through Endowus' strict screening process, so that you can rest assured that all these funds are good. Third, low fees. When compared among other robo-advisors, Endowus has one of the lowest fees. And it's even lower if you invest with your CPF or SRS. Even though the fund level fees are high, I wouldn't worry too much because it might be worth to pay a little more to get a better return. Next, let's talk about what I don't like about Endowus. First, they have a slightly higher age requirement when compared to other robo-advisors. While StashAway and Scythe minimum age requirement is 18 years old, Endowus is 21 years old. So if you are 18 years old now, you just go somewhere else to invest and come back in 3 years time, yeah? Second, Endowus minimum investment is $1,000. And I know that for new investors, $1,000 is actually a huge amount. But here's a good thing, Endowus allows you to fulfill the minimum investment by combining cash, CPF and SRS. So this requirement isn't actually such a big deal. So that was a quick intro about Endowus and hopefully you find it useful. Like, share and subscribe as I'll be posting new videos every Monday and sometimes Friday.